Hey, this is Market Moves with Matt, with your host, Matt Janino. And today I want to share with you the #1 option strategy to make money. And this is a strategy to not just get 30%, 50%, but get 100%, 1,000%, 10,000%. And I'm not joking. This strategy is going to help you achieve those insane results. And there's one best way to do it. And it's trading options on Friday. And if you're familiar with my previous options video, I talk about options and what they are, what is priced into that price. And when Friday rolls around, the Vega, the Theta, which is the volatility priced in, and the time priced in, those are pretty much zero. So all you're paying for is the delta on Friday later in the afternoon. And what this means is that you can get insane returns from options because you're not paying for stuff that you don't need to pay for. You're paying for straight price movement, which is really, really good if you are a trader. So if you have $25,000 in your account, you can day trade options. And if you do it on Friday, you can get these insane results. So let me show you an example of what I'm talking about. So on Friday, like I said, most of the time and the Vega is priced out. So what you're paying for is 90% delta at this point. So this is an option screen for trading on Thinkorswim. Right now we have the calls and the puts, and this is an example of the options expiring on Monday for the SPY. So these are mostly delta, but there's still a little bit of theta and Vega priced in. So check it out. So this is going for about $1, let's say, this option, and we're at 275. That's our strike price. So that means that the real value, if this expired tomorrow, would be 42.42. So you're paying $1, and it's really worth 0.42 if it expires. So what that means is you're paying for some extra stuff. You're paying for the theta, you're paying for the Vega, you're paying for some other Greek deltas. So later in the day, this dollar price is going to get close to 0.42 as the day goes on. And what this means is you're paying for mostly delta, and when the price moves, you're going to make a ton of money. And I'll show you an example. I'm going to pull up this chart, and if you can buy options that are going to expire very soon, you can make these type of returns. So I'm going to copy and paste the chart for the option. So we're charting the price movement of that option. This is really cool to see because you can actually put some indicators on there and you can track if it's overbought, oversold, and you can see the volume. So it really helps you visually to see what's happening with the option. So right here is a 4-hour chart of the option, and we have it going back to look like a couple weeks. And as you can see, options, because they have all this stuff priced in, they lose value over time because the theta is going to drop that value as time goes on. And yesterday or Friday, we had a huge spike in the market, and we had it go up maybe 300, 400 points in the SPY and the SPX, and that made this option go from 13.13 to about $1. So that return right there is a 10x. Isn't that crazy? So you could have 10x'd your money if you bought the options expiring next Monday. So this would still give us one more day of theta to drag the price down and Vega to drag the price down. So we still have a lot of stuff priced into this option because it still has a day to expire. So if I go back to the Friday options, so the options that expired the day of this price movement, the returns are much more massive. So we have a $2 option right here. 0.02 is $2. It was $2 on Thursday, and it jumped up to 0.54. So that return, let me plug that in for you. So as I calculate this, if you bought the option on Thursday and you let it run most of the day on Friday, so meaning that it expired on that day, you would make 2,600% your money. So these returns aren't unbelievable. They're very possible. And you can do this with trading Friday options because this is where all the price movement is. And you can get these returns, and they're very, very possible. So I just want to show you this strategy. We're going to check out another stock that popped on Friday just to check out the returns and see if they're consistent in different equities. So let me pull that up for you. So I know Facebook popped a good amount on Friday as well. So I'm going to pull up the Facebook option, and just to go over this again, I am copying the option tag. So I'm copying Facebook and its strike price and when it expired. So this is what makes up that tag, and you can plug it in the chart and actually see the chart for it. So this is the one expiring next week. So let me pull the dates back from 13 to 06. All right, so we got similar returns. We had a $3 option pop up to about $1 at the high of the day. So that is a better return than the index if you were trading options. And this just proves that buying cheap options maybe on Thursday before the market closes can be very, very profitable. So for you to make 2,000%, you can have a lot of losers as well and still have a relatively good gain overall. So these percentages, very possible, and I've shown you two great examples of them, and hopefully this helps you understand why Friday is the best day to trade options and make money. So hopefully you like this video. If you did, hit the subscribe button. I'm going to be posting more of these as the days go on. So take it easy, enjoy your week, and happy trading.